Hi guys, and welcome to this week's edition of our weekly forecast, where we're going to discuss what we anticipate the market to do in the coming week. So for those of you who are new here, I would suggest you click the like button or the subscription button so that you don't miss any episode once it's uploaded. And if you are enjoying the mentorship, just send me a message. Right, let's just get into it. We don't want this to be long and boring and all that. As you can see, September, we have lifted off, right? Dollar has shown a bit of recovery since September started. What's the main cause of this? Why are we seeing the bulls trying to push price up on dollar index? Number one, equities are looking very jittery. They're not stable. Number two, there's few attractive foreign currency alternatives compared to the dollar. Number three, there isn't much to look forward to in terms of Fed stimulus, right? And then number four, COVID-19 safe haven demand. So as it is, we can see that dollar is still king when it comes to being a safe haven currency. Yes, we can talk of other currencies or other commodities or other cryptos for that matter. Bitcoin, we can talk of gold, we can talk of the yen, but right now dollar is showing us that it's still a force to be reckoned with. So then how do we approach the coming week in terms of our trading? Number one, the fundamentals are going to be critical, right? We could have the Democrats and the Republicans agreeing on a stimulus package of at least $2.6 trillion. And that's even going to further increase the possibility of the bulls taking control. But prior to that, we might see dollar retracing a bit to the downside. So then how, from a technical point of view, do you approach this scenario, right? So last week I noted in the group the break above 94 on dollar index. The break above 94 on dollar index. That was very crucial since the peak of March 20th, right? Which came in at 102.99. So that break above 94, let me just highlight the 94 area. The break above 94. That break above 94 is critical. So you need to be well aware of this level on your charts. Make sure you highlight that break above. So I'm just going to highlight it here with a different color. I'm going to put a red line because it's a critical point. Now when we look at our market structure since the beginning of the year, that is from January up until the current month, the high of March, which came in at 103.81, right? 103.81, that's our high. And already we can see September has formed what I would like to call a new low. We've got a new low that has been formed here. Yes, price can trade lower in the coming months, but if this September low, which is coming in at 91,725. That's our September low, 91,725. That's our September low. We can clearly see this is a swing point. Price moved from this level all the way down there. This is a swing structure that you have to take note of. So this is our high. We've got our swing high here, and we've got our swing low. Right? I hope you understand me perfectly there. We've got our swing high and our swing low. Just to get like where price is in terms of whether we are in a discount array or we are looking for premium arrays. Right now as it is, I would be very careful in going long, right? The reason why I'm saying that is because of the fundamentals. Number one, the COVID uncertainty. Number two, the election year. Number three, China and America, they're having their squabbles in terms of trade negotiations. There's a whole lot of bans that we are seeing in the market. So once we have done that, we have highlighted our swing points. I'm just going to place my fibs from the high to the low, right? So you can clearly see we are still way below our equilibrium price point, right? We are way below our equilibrium price point. So what then are we going to be looking for? For now, dollar still have room to play around in terms of whether it's bullish or it's bearish. But for our analysis and the strategy that we use, there's 2 points that you need to be aware of, and I've already highlighted this to the mentorship group. We've got the low of this month here. That was June. The low of June is coming in at 95,900. The low of June coming in at 95,900. So you highlight that 95,900. That's June low, and probably the current high of this month, which is at 94,790. That's the current high. So I'm just gonna borrow this, place it there, 94,790. Right, I hope I'm correct. 94,790. Right, that's our current high. So you can see already the structure that we have there. We've got our fair value gap here, right? And we had market offering sell side liquidity during the month of July. Market was just offering sell side liquidity. So in terms of technical, from a technical point of view, we expect this gap to be what? To be closed up, for market to trade into that gap. And since I highlighted this in the group last week, I think it was Tuesday, Wednesday, price was already rallied, meaning you'd have benefited already from knowing that dollar has to creep in to the upside. So now, once you've highlighted those 2 price points, what else do you need to take note of in terms of your market structure analysis? What else are you supposed to be looking out for? So we can literally mark this level here, right? I'm gonna mark here. So we've got our Fiji there, fair value gap in here. Remember, this is a monthly chart. Then above the old low of June, what is above there, we've got buy stops. I don't need to explain, guys, that what is buy stops. If you're in the mentorship, you should know what we're talking about when we say buy stops, right? So that's above an old low, and below here we've got our sell stops, right? We've got our sell stops here. Let me just put it like here so that when I go to lower time frames we can be able to see the structure. So we've got sell stops below September low. That's for people who have gone long, and there are people who are gonna short. They'll put their stops above July old low. So we have already noted that, okay, we need to be looking forward, at least market going to the upside. That means we will be in a buy model. So I'm gonna go to a weekly time frame. Now on the weekly time frame, dollar index, this is a weekly time frame. You can clearly see the 94 level. Why I'm emphasizing the 94 level? We had a clear market breaking to the upside. Buyers took control last week, and we can't just ignore that, right? We can't just ignore market rallying to the upside like that. We have to take note of it. And now, what I'll be anticipating in the coming week, if the Senate does pass the stimulus bill, we could get a structure whereby market comes down into 94 before we rally again all the way to let me see, so we're going to call that level 95,900, and right now price is at 94, going to say 94.80, right? Institutional price point. So I'll be anticipating a structure like this, whereby we can get a retracement to 94 before we load more longs to the upside, right? Targeting 95,900, which is our July low. So once this is done, what then are you looking out for? We need to be looking out for bullish order blocks, discount arrays, right? We need to look out for bullish order blocks where market is gonna trade lower too before it rallies, and we also need to be looking for price to trade into bullish rejection blocks, you know, those standard discount arrays. So already on the weekly chart, this is our last down candle. I'm gonna mark the whole candle from its high to its low, right? This is our last down candle, and we've got its 50% min threshold coming in at 93,118. I'm just gonna round out that to an institutional price point of 93.20, right? So this is gonna be 93.20, which is our closest institutional price point from 93,118, right? So this is our bullish order blocks min threshold, that's 50%. So we've got our bullish OP here. I'm just gonna say 50%. It's crucial that you mark out all these levels, guys, so that when price comes down there, when you open your chart and you look, you know exactly where price is trading to. Right, now we're gonna drop down to a daily time frame. You see what we have here? We also have another down candle in here, right? I'm gonna mark out its body, and then I'm gonna highlight its 50%, right? And that's coming in at 93.43, 93.43. That's 50% of this down close candle, which is our original level of demand. It's a new original level, guys, price, but already price is traded back into it, so it's a used up level, but not by much, probably just once, because price has returned back once in that level. So you can see already I've got a structure that I have mapped out, right? From the daily down close candle down here to the next one, we've got a swing high and a swing low. That's from last week, right? So if you place your fibs from this low here to this high, look where the 70% retracement level is coming in at. We've got price. If price does drop down here, you see, look where the discount is coming in at. Look where the discount is coming in at. There. You're looking for discount in a bullish order block. You see? Remember I highlighted the weekly bullish order block. So this will be where you expect market to trade to before you target 95,900, which is a short-term target. You see, if you want to trade lower on lower time frames, then the down candle, Thursday's down close candle, yes, it's gonna offer you better chance, but that's a bit too risky. 94 will be an ideal area for you to start hunting for what? For long entries to the upside on dollar index. The reason why I do this on dollar index, guys, is because once you have done this, the opposite applies for currency pairs like Euro USD, GBP USD. You see, the opposite will apply. And then for USD JPY, the same applies. You'll be hunting for long position. So now I'm gonna go on to H4 time frame. Let me just zoom out a bit. Now you can see here the area where I was saying if price does trade back into this level, you can now perfect your levels, right? You can clearly see this is our daily. Our last down candle is coming in here. This is our last down close candle on H4, right? And this is the 50% retracement on H4. I'm just adjusting the level according to the time frame so that I don't have to put all the levels on each and every time frame. Already when I'm on H4, I'll know that okay, in this zone I'll be hunting for what? For long entries. Look the price action on the 94 area. Look at the price action that's happened on the 94 zone. Price closed with a down candle, rallied, came back, circular motion, traded back to 94 and eventually rallied. That would have been a trade, guys. That would have been a long trade on dollar index and a short trade on GBP USD, Euro USD, a long trade on USD JPY, a long trade on USD CHF, you see, a long trade on USD CAD. So you have to know the correlation that it has with other currency pairs, especially those 7 in the basket that measures the dollar index. You have to know. You just don't go into any trade without knowing what the dollar index is doing. So already I've highlighted that we'll be hunting for what? For long entries on dollar index, meaning once we look at Euro USD, we'll be hunting for what? For short trades. And with the COT data report that came out, you can see how the non-commercials have trimmed their long exposure, especially on Euro USD and GBP USD. They've massively trimmed their long exposure. What does that mean? It means they are taking profits on their long positions, right? They're closing their long positions. And if the non-commercials are closing their long positions, what does that do in a long-term outlook? It means they're gonna fall. You see, those assets are going to be dropping, and you can't go against that. You see, so now I've dropped down to an hourly time frame on our dollar index. You can clearly see the structure is now bullish. It has turned bullish. You see, so this level here, the 94 price point, is gonna offer good opportunities to take the market to the upside. If you do use the 94.43, which is our daily order block, our last down close candle, which was on Thursday, if you use that level, it means your risk is gonna be too high. You're gonna need to have a bigger stop loss, because market can keep going all the way to the 94 price point before it starts rallying to the upside. So I hope you have understood how we are going to be looking on dollar index, what we are anticipating. So now let's turn our attention to Euro USD. The same applies on Euro USD. The same analysis applies, right? We've got our yearly structure, right? I've just gone to my yearly, my weekly, my monthly time frame. So this is our 2020 low, this is our 2020 high, right? And you can see we are still way above the equilibrium point, right? But the way price broke to the downside here, the way price broke to the downside at this level here, let me highlight it. So this is our last up candle. The open is coming in at let me see, what is the open on this price? 17.67, right? 17.673. The way price broke to the downside and taking out this low, it means we've got a new low that has been formed on a weekly chart, right? And we can anticipate price to trade back into this 17.673 level before another drop to the downside, meaning we'll be hunting for what? For premium arrays in this zone here, going to the downside. You see, because we are bullish on dollar, we have to be bearish on Euro USD. But it's a case of defining the correct levels now, where you're going to be hunting for what? For your short entries on Euro USD. So what I'm going to do quickly, I'm going to drop down to a weekly time frame on Euro USD. Let me just zoom out a bit. On Euro USD weekly time frame, you can clearly see our last up close candle. This is our last up close candle. I'm gonna highlight the whole body. Some people ask me, what about the wicks, those long wicks that spike through? I really don't put those into perspective when I define my entry points, because I know that eventually the wick will define what? only my stop loss, you see. So we've got our last up close candle with its main threshold roughly at around 1839.5. So we're gonna call that 1840. So that 1839.7. So we're gonna have our that's basically our bearish order block, right? So it's coming in at 1840. That's the closest institutional price point from 39.7. 1840, right? And we have our bearish order block. This is on a weekly time frame, guys, so you must take note. So we got our bearish order block there. So basically I'll be anticipating price, if it does trade into this area here, I'll be a what? I'll be a bear. I'll be selling, right? And take note of the 1767 price point. 1767 price point, literally coming in at the low of our bearish order block. The low is coming in at let's see, where is the low coming in at? So the low here is coming in at 17,616. That's the low of this candle. So now I'm gonna go on to a daily time frame. Can you see we still have an up close candle here, right? This up close candle here, you can see above it there's almost literally two equal highs. What will be lying above there? Buy stops, exactly. You see, there'll be buy stops above there, right? And this is our last up close candle. We expect price to come back into this range, right? I'll be expecting price to come back into this area. This is where I'll be hunting for my short trades, right? This has to be supported by dollar trading lower into those last down close candle or into the 94 level. The moment we see dollar coming into the 94 level, we'll probably be seeing Euro USD testing the 1.18, the $1.18 price point. But now I'm not gonna work on this last down close candle because that's a small range for me to be defining as a entry point to the downside. Yes, you can do that on a lower time frame, but for now I'll be working with my weekly bearish order block, meaning I'm gonna go to my H4 chart now. Right, on the H4 chart now, this is where you also need to take note of this. See this up close candle here, the big bodied green candle here. See this candle, look how price has respected it. Price has respected it at this zone here. Let me mark it. Price has respected this up close candle, firstly here, secondly here, thirdly here. Now some will be saying, but those are small bodied candles. An entry point where you are analyzing your price action with this last up close candle, which literally converts to a bearish order block. An entry point when price tested it to the downside, that's 50 pips. Same applies on the second entry to the downside, that's literally 70 pips plus. I would take that any day of the week. So you can see where price has traded back into. It's this last up close candle here. You see, that's where price has traded back to and found resistance and dropped to the downside. This also supported by what? By dollar trading higher. So now there's our weekly bearish order block. Look at this up close candle here. This is critical. This is the most important candle that I'll be looking out for on Euro USD. That candle there is gonna coincide with the 94 price point. So this is where I'll be hunting for short entries to the downside. So I hope you found this insightful, guys, and hopefully it's gonna help you in the coming week. There's no need for me also to be looking at all those other assets like USD JPY, USD CAD. If you're in the mentorship, you know exactly what to do. Euro GBP, GBP USD, you know what you're supposed to be doing. So in case of me taking all your time making this video long, it's already long enough, 30 minutes now, that will be your homework. Go on to those charts, highlight your areas that you'll be looking out for to trade from, right? So that you practice, make it perfect, right? Because I've already done the skeleton of it. I've already shown you what I would personally be looking out for in terms of trading the dollar index and Euro USD, which in turn should help you to do your analysis on the other assets. So yeah, that's pretty much about it, guys, and I wish you guys good luck and happy trading in the coming week. Thank you.